When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon.
When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon. First off, welcome. I have a feeling that you're going to either leave this session that we have and say to yourself, whoa, that makes a lot of sense. Like, a lot of that stuff is clicking, and you're going to start to become a little bit of an addict. You're going to start going through millions and millions of charts, which to me I think is a good thing. I think that level of practice is only going to expedite the process. Or you could be in the other part of this where you see it and you say, there's no way I'm ever going to get to this point. I'm done with this shit. I'm quitting, right? And I will say that it doesn't happen all that much, but if you do feel yourself kind of feeling a little overwhelmed, that is okay. With time, it's all going to come together. Tonight, we're just doing really basic brush strokes on some of the key concepts. I know I spoke to a few of you. You've already watched some of the videos that I had made on them where they get much more in depth. To me, this is step one. This is really just entry level. Like, you're going to hear me say these words, at least kind of have somewhat of an idea as to what it is. There is a very regimented process here, and the beauty of it is each specific model that we're going to talk about, because realistically we have about 4. You don't need to use all of them. You don't need to use any of them for that matter. You might find something in what I'm showing you here that resonates well with you and something that you can build off of and create your own thing, right? You really don't have to use any of mine, right? I know a lot of people in here do use the Mando model and the London kill zone specifically. A few use the odd nam, which is, we'll get to it, but just basically the inverse of our Mando model as it is. And then last but not least, it's kind of the ICT unicorn. So it all comes together there. You guys can all hear me now? Eber, you good? Let's see, I just saw those messages. Yeah, I just want to make sure you guys can all hear, and then we'll get into it. Let me just make sure he's good before we roll on here. But like I said, everything can really be segmented into whichever one of these concepts that really click with you, and you can kind of create your own thing. And now the beauty of this is whenever you do ultimately create your own model, it's not some, pardon me, not your bullshit moving averages that are going to change all the time. It's not something that you can't go back in time and back test. This is something that you will be able to back test every aspect of said model in order to create something that, one, you can prove is prove success with, but in addition to that, it's something that you will have a lot of confidence in, and when you have confidence in something, odds are it's probably going to work out much better for you when you actually trust it, right? Because to me, there's 3 stages to this, and it's, first, you kind of have to have a basic understanding of the concepts. This, I don't think, is going to take all of that long. I think by the end of tonight, you guys will
and this is only really going to be an hour. It's nothing too crazy, but by the end of it, I just a little bit of familiarity with it will definitely go a long way, because the next step really is to be able to start to see it. You start to see how price reacts to certain, whether it's an imbalance, whether it's an order block, whether it's a breaker. You see in certain market structures which imbalances would be more preferable in that situation. You look and see how price. When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon. Reacts to liquidity. Once you start to see those things in hindsight, that's a very good sign, because ultimately you're not going to be able to anticipate price and see it before it happens if you can't do it in the past, right? So again, it's brick by brick. It's a stepping stone. You don't want to rush too much into this. Get the concepts down. I'm going to show you, and hopefully by the end of tonight you're going to say, oh wow, I see how this works, right? That's the goal. And if that works for you, slowly but surely, with more practice, it's all going to come together. We've had hundreds and hundreds of success stories throughout time in here. With we have over 100 past demo accounts for funded trading, where you now are, you don't have to risk your own capital to trade anymore. 100 people have gotten that right to this point. How many have kept it? We'll find that out shortly, but that's in itself a stepping stone to prove to you that what you are doing is working. How can you be more efficient so that you don't lose that account, right? Or even if you're trading options, right? Same type of situation. How can you get your model to a point where you are consistently making money and not giving it back immediately, right? That's the goal. So, to build off of those three, first you got to kind of have an understanding, then you see it, and then you can anticipate it. Those are really the three steps. And overall, you're going to hear me talk about three main concepts that ultimately come together to create my trading model, the Mando model. Okay. The first being imbalances, second being liquidity, and third being market structure. Right? All combined, that's where you get the Mando model. Okay. So let's just go back in time a little bit, and we'll take a look. And first off, I'll start with imbalances. This is very important because the imbalance itself creates the entire makeup or trade plan associated with whatever we're looking at, right? Without the imbalance, for me, there's no entry, right? Without the imbalance, I don't know where I should be placing my stop loss so that I do not get smacked if it goes against me, right? Really, without the imbalance, there's no trade for me, right? And there's certain situations and certain times throughout the day where you're going to notice, oh, okay, I can see it setting up. It's coming down to that imbalance. It's not quite there. I need to wait, right? So it's even giving you that, like, I guess that little bit of a compass in terms of like, okay, I need to wait. There's nothing here for me, right? And to me, defining that prior to anything is very, very important. So we'll use this previous example on NASDAQ, as the basis for our idea here. But we'll draw our range. We'll get to that in a second. But the idea behind the imbalance is it is a specific region on the chart, okay, where you have an imbalance in price in one direction, while there's an inefficiency in the other direction. What do I mean by direction? Whether it's up buy side or down sell side. Okay, so when we see, and this is simply put what it looks like, and again, you'll probably be able to do this in 10 minutes, right? You were to look at a specific candle, okay, any of these candles, and what you notice is that on either side of this candle right here, there are no wicks on either side of this up close candle, right? From this point here to this point here. That is an imbalance. There is an imbalance in price in that specific region. Why? Right? So, to use terms that I don't, really completely buy into these ideas, but there's, an abundance of buyers and a lack of sellers in this specific region. There weren't even enough to get up into this specific region on the chart. And this range is from 381 to 144. Okay? Now, the way that we look at this is inside this area, right? Think of a teeter-totter or a seesaw right at the park. You sit on one side of it, naturally the other side's up in the air, okay? Now, every time price gets back into that imbalance, it's like throwing a sandbag on the other side. So over time, that area is going to be balanced. But one sandbag of 40 pounds and you're sitting on the other side 180 pounds, that's not balancing that range. So what we would anticipate is that when price hits that imbalance, right, we are going to hit it and take off. We don't really want to sit around in there too long. We want to get in and get out as soon as possible. Okay. So again, wick, body, wick. Okay. One more time. Wick, body, wick. Okay. Price gets into our imbalance. Price gets out of our imbalance. Okay. This is literally exactly what we want to see, right? We want to see price get in and price get out. Now, with that being said, that's a bullish imbalance. I'll show you what the bearish imbalance looks like very similarly. Here it is. So ready? Wick, body, wick. Okay, no wicks on either side. We would anticipate that when price gets into this imbalance, that price is going to get in and get out. Okay, here it is. Ever so slightly. Let's zoom in here and look at this. Price gets in, price gets out. Okay, that's exactly the most ideal situation we have there. Now the beauty of this is, obviously, with more time you'll buy into it, right? But I can tell you, and if you take my word for it, this works. Price gets in and price gets out. There's a few little things that we'll get into as to what imbalance is more likely to be successful versus lower probability. We'll get to that in a second. But the beauty of these imbalances are that when you have one mapped out and there's one that's specifically catching your eye, not only do you have your entry mapped out, right? Ideally, you want a long in a bullish imbalance, right? You want a short inside a bearish imbalance, okay? But prior to the trade, everything can be mapped out here for you. Here's what I mean by that. You have your entry at some point inside of this imbalance. You can even say to yourself, I want to see us leave the imbalance before I enter. That's fine. If you're anticipating price to go up from that point, what's the problem with letting it show you get out of it? That's fine. You might be a little late. You might lose out on a couple of points, but that's okay ultimately, right? As long as price is going where it's going and your entry is not, let's say, for example, up in this vicinity, right? We'll get to that in a second when we map ranges. But also, you have your stop loss just in case you're wrong. The low of the candle that creates that imbalance is always my stop loss on trades. Why? If I'm using this imbalance as a way for me to structure an idea, ultimately, if that low of the candle, if that candle is taken out, what is that telling me? That price inside this region is now balanced. And my idea to buy the imbalance in price, it's no longer valid. If price is balanced, then why am I still hanging on to a trade that's, it's balanced at this point. The price range is balanced. Price can move freely within that zone now because that candle has been voided, right? So it gives me a very sweet criteria as to where entry, exit, and even my take profit. That's going to be when we fall into the liquidity part of things, which we will get to. But simply put, you can go into the idea and say, okay, I want to buy this imbalance. My entry somewhere in the 10,845 range with a stop loss down here at 10.76. If that's too big for you, like there could be a situation where you have a pretty big range and it might not be something that you want to really, potentially be wrong on, right? Let's say it's $10, right? If you're looking at something like SPY, or maybe it's a $10 candle. That's too big for me. You don't need to trade it, right? It's all mapped out there for you. If that's something that makes sense, fantastic. If you're trading futures, you know exactly how much money you could potentially lose in that situation. 20 points for each point times however many points. That's your potential loss. And then multiply it to where you think price is going to go, times 20. There you go. You have your whole trade mapped out before you, right? So there's no more, oh shit, that loss was way bigger than I thought it was going to be, right? There's none of that. You don't have to worry about that anymore because it is all mapped out for you well in advance. And if it's too big, if it's too big of a risk, you could potentially lose more money than you would have liked to lose, then you don't have to take the trade, right? Go somewhere else. There's tons of names that you can look towards, right? Now with options, it's not going to be as simple, right? Because options, you have to deal with a couple other things, such as delta, gamma, theta, you name it. There's Greeks associated with those specific contracts that do influence the amount of money that you can make or lose in a certain situation, right? And if you don't really know all of those that well, that's fine. Just drop something in the comments right now. I'll take a look and I'll explain that a little bit more. But options contracts are a little bit different than what it would be like trading underlying stocks or futures, right? Where it's just cut and dry. I buy at 10, I sell at 11, I make $1 per. It's not necessarily the case with an options contract. You're dealing with a lot of other external factors, which we call the Greeks. But even still, right? Your delta is the probability that ultimately that contract ends up in the money, right? And if that's the case, where you're looking to see, okay, well, my delta is 60. That means and you'll see it on any options contract you ever buy, it's going to show you the delta, the gamma, the vega, and your theta, right? Every single one, it's going to show it. What the delta is telling you is if you have a 60 delta, that means for every $1 move that you have, $1 up, you're going to gain $60 per contract. If it goes down $1, you're going to lose $60 per contract. So you can essentially do the math on, let's say, let's say it was a $4 loss and your delta is 60. 4 times 60 being 240. I know the max that I can lose in this is going to be $240. Plus you got to add in a little theta. We'll get to that later. But that's what you could potentially lose. So when I hear people, oh, I got in and it knifed on me and I got stuck in it, and that, to me, that's a lame excuse. You can have this whole thing mapped out prior. If it voids your plan, then why are you still trading it, right? You need to kind of become regimented in a way where you don't even think twice about it. If it takes out the low of the candle that created your imbalance, you were wrong. And if you can't become good at accepting being wrong, then this might not be the right business for you, because this is something where no matter what, you're going to be wrong. I don't care if you're the best trader in the world, you're going to lose, right? It's just a part of things. And honestly, the more and more that you look to press buttons, the higher the probability you're going to run into a couple losses are. But are you going to allow yourself to lose 10 winning trades of progress in one trade because you don't know how to pull the stop loss? You don't know how to take that loss. That's we've had it here. Actually, we've had people who have gone on insane runs and they've totally blew it on a week of bad trades and not respecting a stop loss, right? Because you're all going to get to the point where you feel very confident that you can kind of identify where price is likely to go. It always comes down to that execution, and with time your execution is only going to get better and better. But at first you really have to start to embed it in your brain that this trade was mapped out prior. If I'm not following my plan, whose fault is this, right? A lot of it comes back to you, and a lot of people can't handle that. So that's why I'm just being very, candid about this and straightforward, because like I said, using these methods, you will have a trade mapped out for you. Are they always going to be correct? Probably not. More often than not, I think you'll be right, but probably not. And if that's the case, can you take losses? If you can't take losses, you're going to be in some trouble, because those losses that you don't take turn into massive losses when you don't know when to pull the trigger on something, right? So the risk management part of it, and you're going to hear me talk about this a lot over the next month, but I don't buy the trading psychology. I think it's important, but I think that it's secondary to actually having an understanding of how price works and how the market actually moves. If you don't have that, then of course you're not going to know, you're going to be sweating trades, right? Your psychology is going to be all fucked up because you don't have a specific game plan in play, right? You just haven't done it enough. Of course you're going to be sweating. You don't have confidence in it. You haven't built up that confidence in yourself to actually trust and respect the trade plan that you have mapped out for you, right? So that just all little secondary stuff that comes into play when this is just trading in general. But let's see. Yes. So the next concept, and also if you have any questions about uh, imbalances at all, uh, put them in the chat right now, and we'll hammer it home. These are very important, just how to map them. Okay, and you're going to hear, I tend to use the universal term imbalances, but there are two forms of imbalances that kind of fit into that one folder for me. And the first being the fair value gap, which when you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon. I showed you guys here, right? A fair value gap, right? We have a buy side imbalance, an inefficiency to the sell side, and up here we have a sell side imbalance, buy side inefficiency, right? Buyers are inefficient in this area, creating that imbalance in price, ultimately pushing price lower. Okay, but the second form is something that I'm sure all of you who've been around for a little bit have seen or heard of before, and that's simply just a gap, right? If you have a gap higher, we call that a bullish volume imbalance, right? A gap lower, a bearish volume imbalance, right? Just gaps, but those gaps, they actually carry a lot more weight than what you might have thought. When you see a gap on the chart, a lot of the times they can kind of indicate the market's next move, right? If you're seeing a gap down up in premium of a range, we're going to get to the premium and discount, don't worry. But if you see one in premium, that's going to show you some urgency to move lower. If you see a gap up in discount of a range, oftentimes that's going to show you some urgency to get up and get going, right? Just all little things that you can add in as well. I just heard the Discord beep. I want to make sure. Okay, good. Yeah, no, I'm glad a lot of people who've been here for a while coming in just for a little refresher. But so that's first, imbalances. So nobody commented, so I'm guessing you guys got it. All right. Of course, if you have questions, feel free. But that'll be kind of step one. Now, step two, we'll go back up to liquidity, right? So this is arguably the most important concept that we're going to talk about. And this is ultimately, to me, where price movement stems from. And liquidity, just another word that you can use to associate with, would be money, right? Liquidity. The algorithm, which I hope that you all buy into by now, and if you're new here, I hope you will buy into it pretty shortly. But and again, not just from me saying it, but from seeing it for yourself, that this algorithm that delivers price is driven by money or liquidity, right? Now, ultimately, the whole idea here is for that algorithm to go chase liquidity. It's going to go to a liquidity target. And, you might be thinking, where the hell am I going to find that? This, to be honest, it's really not the most difficult thing, really. We're looking at key swing highs and swing lows, okay, as pools of liquidity, areas in which the market could likely go to, okay? Now, there's ultimately, and this is really the secret sauce behind trading, in my opinion, I think this is probably the biggest game changer for anybody, really. You can have a bozo using moving averages and trend lines, but if he has an understanding of the concept of liquidity, I think he'll probably do all right. But if we can get an idea as to where price is going based on our pools of liquidity, right, which you can, and I'll explain that next, that's market structure. But if you can get an idea of where price is going, that doesn't necessarily mean I need to buy this and hold it until we get up to buy side liquidity, right? Because there's a few red candles mixed in. You might want to take some profits. But if you're on the right side of this thing for the entirety of this range from discount to liquidity, buy side liquidity, which would be a swing high, sell side liquidity being a swing low, that's a lot of points that you're going to be on the right side of things for, right? This in itself is, 6,000 points. Do the math. 6,000 points times $20 per point. So that could be a lot of money. And again, you don't have to catch every single one of those points, but if you can catch a majority or a nice chunk of those, it's a pretty good feeling. That's a good amount of money that you can make, right? Now, how do we know which pool of liquidity the market is going to target? Is there a way for us to feel really good about it, right? And if you're here, you've probably seen me post stuff on Twitter, and when I post stuff on Twitter, the only way I'm posting on Twitter is if I feel really good about it happening, right? I don't want to be throwing out losers left and right? So, that component of it has actually helped me become better, because now if it's not clear as day, or I feel like it's clear as day, I'm not going to post it, because I don't want to have a bunch of clunkers and for idiots to attack me all over the place, right? Unless it's really high quality, I'm not really going to put it out there. But how do we identify which pool of liquidity we're likely to target? Well, we have something called market structure, or our trend, right? You've probably heard that word before. But how do we identify a trend, right? I'm not talking about using that line that people just do this and they try and use it to fit their narrative. That's the best, right? They just try and maneuver these like triangles all over the place to make it make sense, when it's just a load of shit. There's nothing to it, really. But how do we know in a way that we can backtest and prove it that this is something that actually works? Okay. So ultimately, all that we're looking for, and I'm going to use, we can go back to, let's do it on the weekly, actually. This way there's a little bit more humps and lows on a weekly time frame versus a monthly, which is really kind of pure, and price movement is pretty smooth. But let's take a look, okay? So I think it's fair at this point to say that, let's go back here, whoops. We took out this high, right? And this goes for any high or low. We could do this anywhere. I know we're going back to 2018, but I just want to show you the repetition over the last couple years. It's fair to say that we took out this high with what price run? Okay. From our this low, swing low, to swing high. Fair? I think I would say that's a fair assessment, right? So we're looking for highs and lows to be taken out. If we take out a high, we are looking at a bullish trend. If we take out a swing low, we are looking at a bearish trend. And we're always going to be pivoting towards the higher time frame. The higher time frame, the stronger the setup is going to be, right? So if we have what would have been technically a bearish structure on a daily time frame, but our weekly, that's getting us down into discount, I'm going to pivot towards my higher time frame. My higher time frame is going to know all. We had something similar to this happen a couple months ago, where we had a weekly imbalance, bearish imbalance form on NASDAQ. But then you look into the monthly time frame and you see that weekly imbalance literally just brought us into a monthly bullish imbalance, and we took flight from there, right? So I'm always deferring to what I see on a higher time frame. And how we analyze this and really come to conclusions is something that I think it's going to be beyond one night. I don't want to overload anybody, but at this point, my model, the Mando model, where it all comes together using the ideas of imbalances, liquidity, and market structure, is as follows. After we take out a swing high or swing low, I'm going to map the range that does so. Okay, so this is the price run that took out that high, correct? Okay. Now from this point, you're going to notice that price does not hit this 50%. What that tells me is our range is not set. Why? Our range won't set until we get an opportunity at equilibrium or fair value for whatever the asset is. Okay, if we do not get to that 50%, there's really no interest to me, because to me, fair value of a range, or of whatever we're talking about, NASDAQ in this instance, is right in the middle of our high and our low. That is equilibrium, right down the pipe. Now, from this point, the way that I look at this specific range is anything above 50% is premium. I am overpaying for it above 50%. If it's below 50% in a bullish range, this is discounted, right? It is below fair value or equilibrium, right? So let's just pretend this is milk, and milk is $5, okay? $5, or generally $5. That's equilibrium. That's the midpoint value. Now, if you go to a place and you see, $7 for milk, you're probably, if it's a necessity and you need it, you might have to overpay for it, and that sucks because you could have went down the street and got it for $2 less, right? But if you see something that's discounted or on sale, you're probably more likely to buy that because it's discounted from its original value, its fair value. So if I don't get 50% on a retracement like so, all that tells me is that the range is not set, okay? So from this point, you're going to look again, and you're going to notice that, again, we didn't get discount. Damn, man, I'm missing out on all this opportunity. Just wait. Here we go. Right up to the high prior to COVID, okay? So you guys probably all know about the COVID crash, right? Quote unquote crash, that's what I call it. What is the COVID crash to me? Well, to me, this just looks like a discount retracement into, we have a couple, hold on, right here. There's one, and here's your second. This is what we would refer to as an inverse. Okay, ready? Discount retracement into a bullish imbalance. Hold on, where's this red one? Come on, give it to me. There it is. Prior to your run for highs. Okay. So, Mando, you were just talking to me about which pool of liquidity that we can target. Why, what was that all about? When you have a bullish trend, when you've taken out a high, and you've seen 50% of a specific price range, go back and backtest this. Tell me how many times price gets into a discount bullish imbalance and takes off for buy side liquidity. Go check in the Manda model folder. You guys are all in the group. There's a zillion examples. This is the market. This is how price action works. Look, just because it's what I use, don't take it out of context. Do it yourself. And you're going to start to see, holy shit, okay, got it. Now watch this. After you get your discount retracement into a bullish imbalance for your run to highs to complete my model, what is one thing that is noteworthy inside the entirety of this? And, this is the broad question, so I'll give you the answer. If we're entering down here in discount, what's really our risk in this trade? Way less than 50% of our range to make way more than 50% of our range. If we're buying 79, right, it's lining up with 79%. We're not using Fibonacci. It's all just for measurement. But if we have an imbalance that down here, this is probably like 81, 82. We're scoring 82% of the range while only risking 18. Does that make sense to you? That makes sense to me. My reward is always way more than what my risk is going to be. And this is why this model, when I first got it put together and started to make sense of it, why it makes sense to me is because this is something that happens over and over and over again. And on top of that, if my reward is always going to outweigh my risk by a lot, that makes me feel pretty good, right? That makes me feel, okay, I can stop out 2 or 3 times. If I hit once, guess what? I erase those stop outs and still make money. That's the goal here, to really, and you might hear some people say, oh, the risk reward doesn't make sense if you know where price is going. Sure, but guess what? When people are just starting to learn how to do this, to have a better risk, have a better reward for your risk, to me makes a whole lot of sense, right? So, as we continue, we're almost done, I promise. Here's your low. Okay, what was the price run that took out our previous swing high pool of liquidity? Right here, and you see I have it labeled. What was that price run? Go through go to every single red candle or black candle. Ask yourself, do we see 50%? No. Okay, that's fine. Range is not set. Go to each red candle. Do we see 50%? Nope, we don't. What is that telling me? The range is not set. The range is not set. The range is not set. Aha! Got it. Low to our high. We now have an established range. This is something that I'll teach you guys after. I don't want to overload you, but when you see the first bearish imbalance happen, oftentimes that's telling you discount is coming. Okay? But from this point, you have a bullish trend. I think that's fair for everybody to say. We took out this high with that price run. Okay? We are now in discount of that bullish range. Okay? So with that, when you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon. What can we look for? We can look for some sort of imbalance to be taking place in here. And I might just add that with where we currently sit on these NASDAQ contracts, they are adjusted over time, 3 or 4 times a year. Okay, so these levels might not be absolutely precise, but if you were to type in at Mando Trading within, I don't know, October 2022 in that tweet, you're going to see that we're going to have some sort of imbalance lining up. In this case, we have something called an order block, and this is for another time. But this is another form of an imbalance. It's for another time. Don't worry about this. You really don't even need to know about order blocks if you don't want to. But price gets down into this bullish imbalance down here in discount of your overarching bullish trend or bullish range. Okay. Now from this point, which pool of liquidity is more likely to happen? You can just refer back to, is our trend bullish or is our trend bearish? If our trend is bullish, where are we looking? Upper highs. Remember that bear market of 2022? Yeah, I just call it a discount retracement into a bullish imbalance. That's all. All it is. Just took a little bit more time than COVID did, but guess what? Same result. Price just gravitates towards discount, specifically an imbalance, ultimately running for our buy side liquidity target, which is our previous swing high. That's all it is, folks. Ready? I got another one for you. Okay? So, following our first shift in structure here. Okay, you guys remember that bank crisis that we had with Silicon Valley and all of that nonsense, right? You guys remember that? Well, what happened after taking out this high? What's our range that we can map out from our low to our high? Fair? We took out this high with that price run. Okay, what do you notice here? What's in discount of this bullish range, right? When the bank started to blow up. No, we're just getting into discount bullish imbalance. Do you see why I don't give a shit about news? It doesn't matter to me whatsoever. Price is algorithmically delivered in a way in which it's something that is repeatable regardless of the news. I don't care. I'll go to any chart. I'll go to Tesla. I'll go to Apple. I'll go to Boeing from 1970. It doesn't matter. I don't have the earnings reports from back then. I don't know if they had wings flying, blowing off the planes back then too, right? I don't know any of that shit. But price delivers this way since the beginning of time. We can go back to Boeing if you guys want to do that. I have a whole video of that going back to Boeing. We did FedEx, or maybe it was UPS. I forget one of those. We're going back 40 years. These concepts still work. Right now, here's your low to your high. Here's your discount bullish imbalance. So right when we hit 50%, what is the more likely draw on liquidity? You're going to hear us all talking about that in this group. Draw on liquidity. That is the target, basically. Where do we think price is likely to go? Well, we have a bullish trend. We got our discount retracement. We got into a bullish imbalance. Ultimately, we're looking for highs here, right? We're looking for a continuation. And there it is. Bingo. Run for highs, okay? Now the same thing applies. We took out this high with what price run? From your low to your high. No discount retracement. That's okay. What is that telling us? The range isn't set. Don't worry. We'll get an opportunity. I feel good about that. Okay? From your low to your high. Here is your discount retracement. Do we have a bullish imbalance? Sure do. There's your run for highs, right? Once we get to 50% and this range is set, where's price likely to go to? Our buy side draw or our sell side draw? Are we bullish or are we bearish? Well, we're bullish. We took out this high here with that price run. We're looking for this high. Guess what? Low, up and through. Mando model is complete. Okay? Now, how about this one? What we're about to complete here, and I fully anticipate this happening over the next couple, hopefully sooner, but probably over the next couple of weeks. What was the price run that took out this high right here? From your low, your previous discount retracement into a bullish imbalance, to your, go to each red candle, you're going to notice that our range was not set. Even after here, our range wasn't set, right? 50% we need. That's okay. Discount retracement below 50%, check. Bullish imbalance, check. Let me remove this. It's a previous bearish imbalance. We'll get to that another time also. Price gets into discount, bullish imbalance. We sweep liquidity. Is this our range setter? Nope. Low to high. Here's your discount retracement. We sweep liquidity, gather money. This is something called turtle soup. Again, for another time, I don't want to throw too much at you, but this is a layup. Run for highs. That's the expectation. And that's going to complete the Mando model yet again. And that's it. That is the Mando model. Imbalances, identifying liquidity, understanding current market structure. That's really it. That's my model right there in a nutshell. Now, you're just showing me NASDAQ. What do you want to look at? We'll look at anything. You want to look at Apple? Sure, we can look at Apple. Do you want to look at Tesla? Go ahead. Let's go. Go through 100 names. Don't matter. Ready? We'll see an immediate one right here. Low to your high. Discount retracement, 50%. Bullish imbalance, right here. Run for, oh, not yet. It's coming. Ready? Here's another one. Low to your high. We took out this high right here with that price run. We didn't get discount. That's fine. Did we get it over here? Not quite. Okay. Big range. Wait, one more time. Whoops. There it is. Okay. There she blows. There she goes. Next. What's the next one you guys want to look at? We'll look at Microsoft. We'll go through all of them. Don't matter. Ready? Same situation here. From your low to your high. Here's your discount retracement into a bullish imbalance. There's your run for highs. Mando model complete. Why are we targeting this high? Our trend is bullish. We got into a discount bullish imbalance. Buy side, here we come. Okay. Next up. Low to your, whoops. Go through each red candle. Let's see if we get discounted. Nope. Okay, that's fine. Let's see. Did we hit it there? No. Nope. 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 No discount retracements. That's okay. We can look towards our daily range. That's what I currently have mapped. Right? If we go to the daily, it's going to be much more clear. Ready? So if you're not in discount on a monthly time frame, that's okay. You can look at something like Meta. That takes 11 years to complete a discount retracement on a monthly time frame. But go over to your daily time frame. Clear as day. From your low, whoops, to your high. Here's your discount retracement. Here's your bullish imbalance. Here's your turtle soup. That's just an added layer. You don't need it, but there it is. So far, so good. Where's our buy side target for Microsoft? 468.35. Right? Let's go to Netflix. Okay. Where are we? Go through each one of these little price fluctuations. Okay. And you can go through every time we've taken out a high. What happens? Okay. We took out this high with what price run? Low to high. Bullish imbalance. Run for highs. Mando model complete. We took out this high right here with what price run? Low to high. Discount retracement. Bullish imbalance. Run for highs. Mando model complete. Low to your high. Discount retracement. Bullish imbalance. That's a gap up. Volume imbalance, right? We talked about that. Run for highs. Mando model complete. low to your high, discount retracement, bullish imbalance, run for highs. What's next? Go on forever. Low. This is what we're currently working with on our range on the weekly. Any more? We can go through any. Does it work on crypto? Sure. Low, high, discount retracement, bullish imbalance, run for highs. Low, high, discount retracement, bullish imbalance, run for highs. Low, high, whoops, discount retracement, bullish imbalance, run for highs. You're starting to see it. Come on, tell me you're starting to see it. Nice. Great. Integrity. I knew you were newer here, so I want to make sure of that. What do you think, guys? What do you think? And what do you think, Ibra? What do you think, Flow Hunter? What do you think, Greg? And the rest of you guys have been here. Joe, what about you? What are you guys thinking? Repeatable. You sure you want to see it on GME? I don't want to show it, but I will. Fuck. What do you see? What was the price run to take out all of these all-time highs previously? Low to your high. Look what we got on GME right now, folks. One big Mando model. Deep discount, bullish imbalance. Low, high, discount retracement. It's a matter of time, unfortunately. That's all it is. That's a great question. Let me read out the rest of the comments, and Gash, I'll get to yours. That's a great question. See, it seems like an easy way to trade. Yep, the way, ultimately, it's something that maps out the entirety of your trade. Therefore, if you are wrong, you're stopping out for minimal losses. If it's not going to be a minimal loss, then why are you taking the trade? It's too big for you. You know that before you even enter the trade. Why would you take it if you think it's too big for you, right? That's the beauty of it. You have an idea of where the target is. It's going to completely outweigh the potential loss that you're going to take. And if it doesn't, then why are you taking the trade? It's mapped out before. You know what it could possibly be before the trade. There's no getting caught with your pants down in this. It's always mapped out. Beautiful with this simplicity. No favorite indicators, no mess of a chart. Starting to better understand the price delivery helps you really establish a plan. Yep, absolutely. You don't need any indicators. Anybody who tells you that you do, they're full of shit. It's to me that is much more distracting than anything else. The news, what you see on CNBC, what you see from 99% of these idiots on Twitter, it's all bullshit. You don't need any of it. If you learn how to read price and you can see that this is something that is extremely repeatable, and remember, we have 4 of these. This is just one. This is something that you can feast off of, and that's all it takes. One setup. You don't need to trade the same exact thing. You don't need to, stress yourself out. If it's not there, you're going to finally believe that, okay, I don't need to trade because I know the next time I get it, I'm going to hammer it, and I'm going to set myself up for a couple weeks. Right? Yep, new indicators are time and price. That's it. The time aspect of it is something that is very important that we will get to at some point. But again, I don't want to overload anybody right now. This is great. This is a great question. Once the model is complete, do you go to the next swing low to swing high? Absolutely. Okay? And this is, Gaj, where the inverse Mando model, and we've kind of dubbed it the odd nam, comes into play. Okay? So let me see if I could cherry pick an example here. Let's see. We haven't had many of them because we've been bullish for so long. Actually, let's just go back to NASDAQ. We'll go back to the quote-unquote bear market. Okay? So at what point do we really know when this range is done? Did we reach all buy side or liquidity swing high targets? Yeah, if we did, then guess what? Anything above all-time highs, I got nothing for you. We've never been up there. There's no money resting up there for the algorithm to go and get. I have no idea when big money is going to start to sell off, right? That's as candid and to me as simple as I can possibly put it. I have no idea when this thing is going to stop on Nasdaq. Could we go to 25? Sure. Where are you getting that number? I don't know. I'm guessing. That's literally what it is. Anybody telling you that we're going to 600 SPY is just, yeah, I think that's where it's going. I think. There's no fabric behind that. We've never been there. There's no reason for the algorithm to drive to that point. We can use that as a specific target. Yet, we don't know when big money is going to pull their money off the table. When they tell us it's time, it's time. Okay? And how do we know it's time for us to go see discount? When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon. Balance. Every single time that we've gone and seen discount in any of these price runs, back test it yourself, go look on any chart you want. Anytime we're about to go down to discount of the range, what do we see? Bearish imbalance. Okay. What do we see? Before we got down into discount right here. Okay, we got down into discount in August. Bearish imbalance. Every time. Every time we see discount, there's going to be a bearish imbalance. Bearish imbalance. Bearish imbalance. Look how price reacts to it. There it is. There was a few here, but our range was so quote unquote extended at this time. From 2020 to 2021, end of 21. And we ranged that range from 8,000 to 18. That's 10,000 points before you got any sign of retracement. Bearish imbalance kind of sold it to you, right? But that is essentially the odd nam. When you see that bearish imbalance, you could look to play a retracement back into it and then ultimately look for discount. Not as big of a risk reward type win as what you can get with the Mando model, but still, so you're not sitting on your hands waiting for price to retrace down here, because this took a while. This bear market, quote unquote bear market, November down to, it was about a year of us steadily declining prior to getting to discount, right? Do you want to just sit here and wait a year before pressing another trade? Probably not. But it's just another thing that you can add to your toolbox as a way to identify a downside trade. That's the odd NAM model. That's another thing that we're going to get to in much more detail as we continue on here over the next couple months. If you look at our third, again, I'm just going to briefly go over these. Our London Kill Zone model, that's much more futures or index based. It's not so much the individual names, but it's something that you can use to look for a quick hit in the morning, right? It doesn't even have to be the morning, but it's a quick hit based on the London range that you're seeing in your futures data. That's another one that we can use. And the last being that unicorn model, which that one's going to be a little bit more confusing right now, so I'm not going to explain it because I didn't teach you guys anything about breakers yet, but that's coming. And those are the most powerful, in my opinion, the most powerful type of imbalance that we can really look towards. They don't always occur, but when they do, they bang. So let me come back over here and make sure. Everything else will mess you up once you learn time and price. It's true. And I always say this just to be fair, just because you're here doesn't mean that you have to trade like any of us. You don't have to do that, But if I can show you one thing that you can add into an existing model that separates you, that's fantastic. That's a win. But you'll notice that all of those people who come in here with their own model that trade off of whatever it is, moving averages, trend lines, whatever, when they, been here for a little bit, you'll notice that slowly but surely each one of those indicators start to fall off until your chart's looking like this with nothing. The two I have are time-based. New week open gap, something we'll get to. And then just it maps specific times on the chart that when I click that on, it'll show me the 9:30 open. Again, that's the time aspect of it. We will get to that. But in terms of overall price delivery, can't get much more simple than this. This is something that is repeatable. It's something you can go back on any chart and do this on. Just got to give it a little bit of time, a little bit of practice. And the more time and practice you put in, all that's going to do is expedite the process for you to feel good about doing this for yourself. And when you do, start to reap the benefits. LKZ, yeah. Let's see. Mostly we all trade differently off the same concepts. Yep, basically, right. And that's the beauty of it, because there's a lot of things that fall under this umbrella of like reading price, right? There's totally a lot of stuff. But at the end of the day, you, like I said, I led the whole thing off with this. You don't have to trade like me. You don't have to trade like KD. You don't have to trade like Sean. You don't have to trade like Ryan. You don't have to trade like Seeker. Go down the list. Cajun, Kyle, breaker model, right? Snaz. You all have different models, right? Now with that, what's the key takeaway to all of this? There might be one thing that sticks out to you. You might have heard me just talk about premium versus discount. That might be all you need. When we get into breakers, that's a big one, because a lot of people have literally just built their model off of breakers. I know Kyle trades off breakers quite a bit. That's I don't know if it's exclusively his thing. Yeah, no, Ibra, you're right. We all trade ICT, but there's just so many different ways to go about it. And really, for me, it took me a while to settle in, use one, which is my Mando model, right? But beyond that, I started to say, okay, well, I see that price loves to come to discount. There's got to be a way for me to identify this and capitalize on that discount retracement so I can play it both ways. And then I, through back testing, this one didn't take as long because it's something as simple as an imbalance showing you that price wants to go to discount. Then that's where the odd-nam or the inverse model came from. The kill zone is a time aspect, and that one's really smooth too. Take out a higher low of that London kill zone, look for the opposite side following an imbalance formation. Smooth, nothing too crazy. And then the unicorn you need to know what the breakers are, which we'll get to. That's just a patented setup. It's visual, but we will get to that. I don't want to throw it all at you at once, but you won't be a poor. You go 2 weeks of working normal times, and you go 2 weeks off where you're working overnight and stuff, and then you try to trade the overnight, and it's not always great. But anyways, that is all I have. So for anybody in here who has any questions based on anything that we talked about tonight, feel free to send it over. I'll happy to answer any of your questions. And to me, I take pride in being able to answer the questions that are asked. When you ask somebody a question and they don't know what the hell they're talking about, they don't even address the question. I'll always address your question because I feel like with my model, I know all the ins and outs. Everything that you could possibly ask me about it, I feel confident to give you an example and an explanation as to why something would work, why something would not work. All right. So this is a lot of hours at work. What I just showed you there, I wish it was an hour long when I was putting it together, but that takes a lot of time. Snaz, I have it recorded. Don't worry. I'll put it on YouTube and I'll send it. But that's all I got. So again, if you have any questions about anything here, if you're struggling, if you're 3 weeks in and you're like, shoot, man, I got to figure this out. I'm falling behind a little bit. Just shoot me a message. We'll get it sorted out. Don't stress it. And don't be so eager to push buttons. If it takes you a little bit of time before you feel good about it, that's probably going to save you some stop out money along the way. Just take your time, learn the concepts, and when you learn the concepts, you're going to see how trading becomes fun. But that's all I got. So yeah, they're coming. Our lives like these are coming back October 1. So I just want to get some of the newer people here to get in the mix a little bit, just have somewhat of an idea, just so when we do start rolling, they're not completely behind. So, but all right, I'll catch everybody later on. See you. ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon. Alright, we're currently long NASDAQ right here, so the price action has been pretty bad today. But when I look at things from the higher time frame perspective, to me, despite it looking nasty on the smaller time frame, I'm still looking for higher prices. And realistically, whole idea is really stemming from the S&P. So if we go over to the S&P, you will notice that more specifically beyond just the hourly, we're actually seeing on a 4-hour perspective that you have this imbalance here on the daily time frame. It wouldn't make all of that much sense for us to not get into that imbalance, in my opinion, and that's why I think towards the end of the day today we can get this push to move price into that daily imbalance. So I am long. I'm looking for a slingshot, and I'm leaving this as is. If it were to take this out, I have fully assumed the risk prior to entry. It's like make three, risking one. So I'm fine with that. The first order of business here from this perspective would really be to take out this 5-minute inverse imbalance here, okay? So I really want that to take care of business there. And if it were to take care of business there, that's probably going to be a balanced price range, right? Imbalance through a previous imbalance. And if that were to be the case, then honestly, I'm feeling really optimistic about this trade moving forward. A rejection from this point, I'll know pretty soon that is probably not going to work out all that well. But also, in addition to what I showed you there on the daily, we also have this. I know we have CPI tomorrow. We have data down the rest of the week here. This is Tuesday, a non-data Tuesday, as well as a non-data Monday. But ultimately, I'm looking for this to get mitigated, and from this point, I think we snap to these relative equal highs relatively quickly, and following those relative equal high sweep, I think the writing is on the wall that the Mando model will complete at 21,931. Man, at that 21,931, I will likely take my profits from that point. Maybe I'll, drag it and see if we, the whole idea behind the Mando model, following the target being reached, there's really two ways that you can play it. You can look to see if there is a sweep of liquidity, which would ultimately imply that we'd get a discount retracement after that. Or on the flip side of that, you can look for that expansion, that imbalance candle through. And if you get that imbalance candle through, that's offering you signs of continuation. And at that point, I would probably just drag my stop loss way in profit and let it play out. But from this perspective, I really want to see this snap and get into this next imbalance and take out these relative equal highs in the process. So it's going according to plan thus far. And we'll see. We'll keep on tracking this as we go. I really didn't want to be sitting inside looking at charts right now, but that's okay. I saw this setup and I figured it was probably worth one to take. So in addition to all of this, right, I showed you the whole thesis from daily, hourly, down to our 5-minute, but in confluence with all of this, we have our 2 p.m. silver bullet. Okay, so right now it is 2:19 p.m. Eastern. Inside that 2 to 3 p.m. Time slot, that is when price tends to deliver better, and obviously throughout the day today it really was not delivering very good. Okay, so now the most important 5-minute candle here, as long as this 5-minute candle does not tag 858, we are in business, okay, because that would create that bullish imbalance. I really want that to create. And if it does, I think we're in really good shape. If it does not, I think we're not. Okay, so as simple as it is, but that's just kind of how I'm walking it through. I'm going to add another imbalance here as it was created. So you have little mini 1 minute along the way. The far left chart is my 1 minute. There's one. Where's your next? Here's your next. This one lines up with the 5-minute. So this is really what we're working with in terms of imbalances on a 1-minute perspective here. You know, there's a few, but there are a few. But if my draw on liquidity is correct, which I think it is, these imbalances are going to do nothing more than just act as a speed bump along the way. All right. So let's see. So really need this 5 to form. That's the idea here. Right, you got multiple levels imbalances here, but I wouldn't want it to come here prior. That prevents the 5-minute from forming. I really want that 5-minute to form. Now we just gotta wait. Let me come over here. Let's see. Okay. All right. Back here. All right. So let's let this shake out. If a 5-minute were not to form here, would that be the end of the world? I don't think so. I just think at that point you kind of have an idea that your trade is probably going wrong here. So you would stop out for like peanuts in terms of, you know, in comparison to what you've already made right now. But I really want this to go from this point. I think that's the highest probability for success. All right. And, you know, if you're listening to this when I post this, you probably know that today's PA was pretty bad. But if you're listening to it well down the road, take my word for it, it was a pretty bad day in terms of delivery. Very choppy. The moves would come, but when the moves came, it was very swift. They were, you know, quick shot moves. The range isn't all of that big. So just really kind of a nasty day, to be honest. But silver bullet time. I do tend to be on the lookout during the silver bullet times. And right now I'm looking for the first run into here, and then following that, the Mando model completion. So I might have to sit around a while and watch this, but it is what it is. I'll try and kill time with some commentary here. So right now we got into the inverse, and we're respecting it nicely. Still have a minute and a half to create this imbalance. If that forms, I'm going to feel really good about this, doing what I want it to do. Okay? So now a question might come like, all right, do you do this when you look for swings and everything? Yes and no. It's not, it would be the same process, just on a different higher time frame, right? When I'm looking at the smaller time frames, I need to be as precise as possible. If I'm not, then my entry is probably going to be bad. I might open myself up to more risk that I don't necessarily want to take. So precision on the lower time frames is so important. And you know, also to just be fair, and I say this all the time, and I'll echo it here as well. When you are trading the smaller time frame, it is automatically going to be much more difficult than what it would be if you were trading smaller time frames. Here's why. When you're looking from, you know, if you buy into the idea, and hopefully at this point, if you're listening to any of the content that I make, you've probably bought into the idea that the higher time frame is much more influential than what you're seeing on the smaller time frame. But if you buy into that idea, you will note that it is much more smooth. Yes, it takes more time. It's more, I guess, difficult to accept that this is going to take time. In today's society, everybody wants everything right now, but that's not always the case. But when you get to this point and you're trading on the smaller time frame, yes, you will get quicker responses. But because you have to kind of take into consideration all of the other higher time frame you know, price action that's going on, it makes it more difficult. There's way more layers to it than what there is when you look at it from a higher time frame perspective. So, you know, I tend to bring that up quite a bit just to you know, be fair about the situation. But you know, you want to be as precise and accurate as possible when trading the higher time frames, smaller time frames, I'm sorry. there's much more wiggle room for error when you look at smaller time frame scalps or whatever you might be, day trades, however you want to put it. Okay, so we did form this 5-minute through that imbalance, which is good. So from this point, I personally would prefer us not to get into that 5-minute imbalance. I would like to see us expand quickly to get into here first, but you don't always get what you want. So now just a little bit of a waiting game, because we do have, I should have marked this before, sorry. We do have one more bearish imbalance. Why am I not all that concerned with these bearish imbalances? That might be a question you have. Because if we have a bullish structure on a smaller time frame, of course, our higher time frame drawn liquidity, which is not difficult to attain today, but I believe that's higher, then my expectation for these imbalances in premium of this bullish price run would just be to act as speed bumps and nothing really beyond that. So, and I know we're cutting it close. We have an hour and a half left in the trading day here, but I really want to see us expand through this imbalance. That to me would be a very, very bullish scenario there. So I'm just kind of taking a peek across the board. I have some weird names up right now that I'm just keeping an eye on, but so we'll see. Alright, so let's get that next leg here. How about it? Alrighty. When I'm not on live, it's a little bit more boring when you take these trades, I'll tell you that. I like to do other stuff, try and, respect what I'm doing, I guess you could say. It's been very accurate for me, so yeah, I mean, this higher time frame is really just disgusting. I just think the draw is a little higher, that's all. Okay, so let's see. Alright, and right now we're just kind of banging around here. Again, I would prefer it to move higher prior to getting into this. If it does, it's not the end of the world, and the same thing would remain from this point. Lower the candle, acting as the stop loss as always. So from this point, you might say, all right, well, I saw your 5-minute entry. Why is the blue line here? This is where you actually entered. And I'd say, yeah, you're right. The reason for that was this was the first imbalance formed following that downside run. At that point, at the very least, my expectation would be the odd NAM completion, which we just got. Right off 50% of that downside run. Okay, so that is the completion right there. Alright, and unfortunately we just tagged that 5-minute. I did not want that to happen, but again, you can't always get what you want. Nothing changed inside the overarching idea. So if anything now, I'd really want it to snap higher fast. Don't want to bang around inside this imbalance. If you do, right, think about it, just the overall word itself. If it's imbalanced and you are spending a lot of time inside of that range consolidating or rebalancing, odds are it's not going to work nearly as good as you want it to. So we got into the 5-minute imbalance. Okay, this could actually technically be the 5-minute silver bullet, right? I view it as here. This was a little bit more risky of a trade, but waiting for that next imbalance to form, like this really should send us to that 931. So So 5-minute tag, turtle soup right here from a 1-minute perspective. Again, take it for what it is on the 1 minute, but I do watch the 1 minute because you could see, if you see the 5 minutes struggling a little bit and you don't really see a specific level, then odds are it's probably just a 1-minute speed bump that's giving you a bit of a headache there, So let's let it play out. I really want the next leg higher to come right now. So let's get this push. Okay, you got more buy side liquidity here, and those are relative equal highs. Again, we mentioned those over here, right, on the 5-minute time frame. All the same, nothing's changed, but I really want this snap right now. Okay. 1 minute tagged, speed bump. Let's see how much of a speed bump it is. This hourly is nightmarish, truly. Alright, so we hit the speed bump and we did in fact slow down. CPI tomorrow, PPI Thursday, and I forget what's on Friday, but there's something on Friday. I think it's University of Michigan sentiment. So, one benefit of trading futures in this scenario is that you're not dealing with the theta burn, right? You're kind of, it's just point for point. It's nothing more than that. So yeah, let's see. Really want it to snap. If it snaps through there, this to me is a sure thing. And then from this point, hopefully we get that continuation type move to ultimately bring us to that 931 target. I'm kind of regretting recording this right now because I don't really feel like sitting here and watching, but it's okay. I gotta eat something too. Alright. We want the snap. We want it to snap through this imbalance. I know the price action's been bad, but if it's going to clear up, it should be here. A snap through to go sweep those relative equal highs would be so ideal. Okay. Alright. I see a little volume imbalance there. It might recalibrate inside of here. But delivery still slow and brutal, unfortunately. So your speed bump, we did end up getting some liquidity here, which is a good thing. Again, just waiting for that snap. Are we going to get that snappy price movement? I do not want to sit around here and go revisit this imbalance. Nothing's going to change inside the trade idea except that I have to sit here for a little longer and delay the inevitable, right? It's just brutal. You can justify it, of course. You have a 5-minute imbalance here, but again, the speed bump to me, this is 15 minutes worth of a bump. I think this is enough. So let's go. Come on. Oh boy. No, I actually believe this is a 15-minute too. So just for reference. Oh no, actually no, it's not. Okay, so the 15 never formed. So yeah, it's fine. This is really just bad delivery. It's slow, but it's just delaying the inevitable. We will be right because the Mando model is inevitable. Every price run that you've ever seen is the Mando model. So I don't want this slow delivery to cause me to treat this any differently. What do I mean? What I mean by that is, if I wasn't recording right now, following getting into here, my stop loss would be moved to this low right here. Lock in like 22 points. So that's like $880. But because I'm recording this and I have a really good feeling that we're going to ultimately run through those highs, I'm going to let it play out. Okay. So we finally get above that 1 minute speed bump. Excellent. We are in the process of creating that next 1 minute here, and this, I want this to be the snap, right? I keep talking about that snap, and in a perfect world, and when price is delivering perfectly and smoothly, you will notice that when you get over that level, it's going to snap. Now, of course, we're dealing with some crap today. Just to be fair, the price action is really bad. But just because it's bad doesn't mean that it's going to disrespect anything that we're doing here. It's still going to play. It's just the process in which it gets to the point we want it to go. That's the annoying part. So no new 1 minute formed. If we keep just stair stepping it, it's going to be so annoying. Like, let's just do it. Give us the snap. We're 4 points away now. 6 points away, whatever. All right, so here's your 1 minute. Here's your next formation. Okay, this could get erased, right? There's still 44 seconds left on that, but so far so good. Is this going to give us the snap that we want? Yes, sir. Come on. Come on. Come on. And if I, again, like I said, when we get into here, if I was practicing good trading and not just doing this for a video for you guys to see, I would slide this up to right here, because this is the an area in which I would not want price to go below. Okay, so first target booked, second target's on its way, and then third target, obviously our big one, and that's the one I want as we head into power hour. It's probably going to happen between 250 and 310 if I had to guess. Okay, that is the macro time, something that we talk about in the group. All right. So we're in the process of creating, potentially creating another bullish 1 minute fair value gap. Okay, that can get erased. There's 40 seconds left. So if we go down here, you're going to see me do this, drag it lower, okay? Because I don't know. I'm jumping it a little bit. It doesn't change anything. But okay, both targets have been booked. Very good, okay? So from this point now, I do not want us to go below this low, okay? That would be where my stop loss would be dragged if I wasn't doing this video for you guys. Because now we're creating an imbalance into that buy side area. Alright, so far so good. You created yet another imbalance here. So you might be wondering, you know, like, this is my 5 minute range, sure, like what is exactly like the 1 minute range? Well, it's technically still expanding, right? We're still expanding this range. Nothing is suggesting any downside right now or discount, despite getting into a higher time frame level, right? An imbalance down would probably suggest we got to go get some liquidity lower, but still haven't seen that. Okay, so at this point, let's continue to push the envelope, and you know, hopefully we get some pretty energetic price movement here to ultimately get to our final target. Okay, so still hovering all of the imbalances that we had created in the most recent price run. A close above this mark, right? A break up and through would be a 5 minute bullish breaker. Low, high, lower low, break up, and it's got to go through, and then we can anticipate this acting as a support level moving forward. But we can't do that unless we get the break up and through. Okay, so 30 seconds left on this 5 minute. As you can see, there is another 5 minute building right there, which don't really want us to see, but very possible for us to see, right? The only reason I don't want us to see it is because I'm already in this trade, right? I want this to go to where I want it to go fast. All right, so as you can see, where's the reaction coming from? The reaction comes from liquidity and imbalances always. Okay, so 4 seconds left. We can form this imbalance here, and we will. So new 5 minute has formed, and I want this to be a breakaway. Again, you don't always get what you want, but as somebody who's been in this trade now for 35 points, I want this to be a breakaway. Okay, I want this to not get touched. If this one has to get touched, so be it. This still has 4 minutes to form. It's not even formed yet, but that's the idea behind that. Okay. I see you guys typing right now in the group, talking about how ugly it is. I would pop over, but I'm currently recording my screen, so I can't really do too much. I can't move off of this. So, all right, yep. And remember, the mark on ES that we were, looking at, and the reason why I'm even considering taking this long right now is because we didn't get into that showtime imbalance on ES while we did on NASDAQ. We're currently in it, okay? So, more annoyance, that's all. More annoying. Now this is gonna just really chop around I bet you for the next 9 minutes. And then after this 9 minutes, I think we can get that nice smooth run to start off quote unquote power hour, right? So I don't think it's gonna form that breakaway. I think this is, it's just got erased. So there's gonna be no second 5 minute. We did form one here, but that's really annoying. And then the 15, let's just see the 15. Yeah, the 15 is not really helpful right now for us. So just gotta sit and wait, unfortunately. To me, the draw is pretty clear, but I really hope this isn't an hour-long video, because then I know none of you guys are gonna watch it. But so I can talk through this while we're on stream, but I can't really show you the stamps. So, alright, here we go. We're hovering above this 5. I think that 5 is probably going to get tagged. Ideally no, but probably going to. So, I'm going to take a quick peek at SPY and see if there's any differences. Okay, so SPY did the same exact thing. It's just kind of grinding through these two newly formed imbalances that, again, are probably just going to be speed bumps because the draw on liquidity is higher. Okay, so I'd like to see that form on SPY. Okay, again, there's a chance it doesn't, right? There's a chance that we just solely follow NASDAQ here and not bother with SPY. But the fact that this is, as grindy as it is, I mean, is this really ideal trade conditions? I mean, when I close this out for a good win, I'm going to be happy, but it's like sitting through this is so annoying. And if you're at a point where you have no self-control and you can't sit through something, it's probably not the best thing to trade. So, same scenario here on SPY. The hourly is so gross. If I was just looking at the hourly, there's zero chance I would take this trade. Look at all these wicks. Look at all those relative equal lows. So if we ultimately do get this move that I'm anticipating today, like to go 931 or whatever, and maybe even beyond, the end of the week might be pretty bad, and just go sweep those lows. But as you notice, like, the range isn't as big as it was, or it has been recently. So okay, so what you really want to see here from this point is this form. That will show you more urgency to go higher. Okay. If that doesn't form, it's just going to be a slop mess. So 30 seconds on that, but really want that to form. Okay. Very good. All right. So you might ask the question to yourself, how are you so relaxed? You're not worried about any of this. Why? And it all stems from before I even got into this trade. What did I say when we first got on here? I mapped out the trade idea. I assumed the risk. It was fine by me. So let's play it. If it's too big, then you shouldn't trade it. Okay. So we did form the 1, which is good. So ideally here over the next couple of minutes, I'd want it to snap and get into 903. So about 10 more points. Alright, so we just tagged the 1. Don't want bullish levels to start disrespecting. Okay, that would not be fun. That's just telling me it's just going to take longer to get to the inevitable. Which, again, I don't want to sit in this for the rest of the day. I'd prefer this move to complete and take care of business by the end of that macro at 3:10 Eastern. Because I'm really hungry. And I can't eat if this trade doesn't go to where I want. No, I'm kidding. Alright. So let's see. Alright, it's still just slow as can be. Alright. Same story. Let me check in here on the chat. Let's see. The last message I see is ugly. I don't see anybody talking about extended downside just yet, so that's good. I see there's some debate. Oh, I do see one person who said that at 2:30. Anyone else bearish right now? That's here. Oh, we're just delaying this. Come on, man. Just go. Just go. This is just, it's so brutal to sit through this. Is it even worth it? I mean, yeah, it's going to be worth it, but is it really worth it? Making you work today. They're making you work for it today. Okay, there's a nice little move. Now snap it. Just do it, man. Come on. We know where you're going. It's just going to take more time. A high close here would be good to create another imbalance. That would be ideal. Doesn't look likely right now, but so you could do it, but it's unlikely again. It's unlikely that's going to form. Okay. Very unlikely. Completely unlikely because it just prevented. Okay. So, we wait and watch this grinder. Oh my lord. Let's pop back over to SPY. Okay, it's fine. It's fine. It's fine. So just for reference, I am trading this on options also. So you might say, well, man, this move's taking so long, like it's gonna theta burn. Yeah, I mean it's not moving proportionately to what we've seen in terms of the actual move, right? We're up 42 points right now, and the contracts aren't up all that much, but I think that just puts I guess it increases the level of importance on buying contracts that are not like astronomically out of the money, like things that are relatively close. I think that's just going to overall enhance your odds at or odds for success. So we're still grinding. We still have that 5 minute left open. We dipped even deeper into this 5 minute speed bump. We're about to approach macro, so I'd really want this to get going here over the next 20 minutes. And if it doesn't over the next 20 minutes, I really didn't want to, but I may just close this so I can go eat. And because I actually can only record an hour at a time and I don't feel like doing another because then I have to crop it and edit it and post it and all that. So we'll see. Ideally, we get the move ASAP. Rocky. $250 has hit. So let's see some swift delivery to liquidity. Let's get a move on, pal. Oh boy, oh boy. Man. should I get to eat? Huh. I don't know. See how this trade shakes out. That'll determine what I'm getting to eat here. No, I'm joking. Alright, come on. Enough. We know where you're going. Let's go. Hurry this shit up. I've had enough. Hurry up. Thank you. That's the snap, folks. Okay, so here you want this to form. It might not be exactly precise this way, but something like that. Another imbalance. It's just showing you more urgency to go higher. Okay, right now we are at CE, or the consequential encroachment of the final bearish imbalance, aka showtime. Because it's macro, I want this to just slice through like nothing. But okay, there's your 1 minute. Very good. Macro, price is delivering faster. You know what I show you guys in here. It's not just made up stuff. Okay, it works. All right, that'll push the con over 2, or 2 cons over 2. Let's get that final push. You blow through this, you're gone. You're going to 37 and beyond. And I want this to happen swiftly. Okay, in reality, I could, I mean, I could be a little bit more ballsy and put the high here, but maybe I'll do that with the options. I'm not going to do that on futures. So, all right, so that's very good. Snap it through, make another imbalance. Show me more urgency during this macro. Let's go, baby. All right, we're almost there. We're 21 points away. Come on. Come on. Let's see if SPY is just about the same. You might actually see a little SMT at the highs, meaning SPY doesn't get the high, but Nasdaq does. That's a possibility here. And a good thing that we're trading Nasdaq and not ES. All right, so come on, let's go. No time to waste. Let's complete this macro. We're 2 minutes into the macro, and since that point, we've already moved 20 points, more than 20, but obviously where we are right now, we're 20. I think I might post this one on Twitter too. We'll see. You guys will get it first, but come on, just snap. We know where you're going. We've been telling you where you're going since here. You could have just saved us some time and gone there quicker. I mean, all right. So SPY also pushing it a little bit. All right, come on. 16 points to go. Should I be ballsy? I'll just be a little ballsy, but I am going to be super aggressive with this stop. So just for reference, I'm going to move it up to the hourly high, or high of day, or high of week to this point. Okay, so I'll be a little bit more ballsy, just for fun. All right. But I have 23 minutes for this to happen, and then that's it, because this video ends in 23 minutes regardless. So come on, give us the squeezer, please. Okay, and the squeezer, if we do end up getting that high of week, then SPY would get this, but otherwise it's not going to. So as you can see, speed bump 1, 2, 3. That's 15 minutes of time spent inside of that imbalance. Here you also have buy side at 6:02:01. All right, so come on, we got the macro cooking. We're almost there. All right, let me just mark this. This is the original target. So from this point, you're going to see how aggressively I do end up moving that stop loss up in profit. All right, 11 points away. Final countdown. All right, want another imbalance to form here? Doesn't have to, but that would just lead me to believe it's going to happen sooner than later. All right, come on, come on, come on. Okay, there we go. Macro delivery, guys. All the stuff I've shown you. I showed you OddNAM, I showed you Mando model, I showed you Silver Bullet, I showed you macros, I've shown you liquidity. What else do you want in this video? Jeez. I'm giving it to you, giving everything to you guys here. Talking about higher time frame draws on liquidity. I mean, there's really not much else for me to show you beyond this. I'm glad I went through the chat. I only saw like a few people bearish right now, but it is what it is. Everybody will get there. Just everybody's at a different pace, right? 5 minutes till this. I'm sorry, 1 minute. There it is. Okay, so we formed another imbalance here. We could form another little skimpy one right there. If you had to put a gun to my head, I would say we probably get to this and we retrace a little bit. So I really should just leave the take profit where I have it. But just in case we get a snap through, I'm just going to leave it. So just like that. Yep. So Mando model complete. Thank you. Come again. Thanks for shopping at Whole Foods Market. And I'm going to leave this here. So yeah, let's see. Haha. So yes, cool video. I hope you guys liked it. We walked price through for about 35 minutes there, and there's another snap higher. Very good. Thank you. Thank you. Thank you. Thank you. All right. Let me just get ready to screen grab the old options chain as well. All right. So yeah, those contracts move just fine, guys. They move just fine. All right, so, with all of this being said, I hope you did learn something today in this video. If you are interested in learning how to read price action like this on a day-to-day basis, come on over to Galaxy Trading, where all of the other nonsense is thrown out. We read price, and we're pretty good at it. You just got to really dedicate yourself to learning. I mean, I'm not giving you the answers here, so you got to learn for yourself. And when you do learn for yourself, you will become the best version of yourself, and that's only going to help you in the long term. I promise I'm not crazy. I'm just telling you from my own experience. Until you learn how to do this for yourself, you are not going to be successful at this. So I will catch everybody later. That's a nice little gainer. I'll see you then.
Welcome to the 2025 Mentorship. 26 new educational videos, bi-weekly class assignments, weekly live trading, and weekly class sessions only in Galaxy Trading. See you there.